Canadian stock in Canada. Please welcome Mr. Gilbert Chen.
Good afternoon. My name is Gilbert Chan, and I just wanted to let you all know, out of all 4 speakers today, I'm the guy most probably have the least experience in China. So I'm going to take a different approach here today, different perspective. So I'm going to take, as an investor, as a Canadian investor, why do you need to care about all this China boom and all this economy going on so well? Because we're sitting in Canada, we're sitting in Toronto here. I'm from Vancouver, so why would I care? So today I'm going to talk about a different approach. My speech is possibly not going to be as powerful as Dr. Chow's earlier one that, hopefully no banners is going to come down from his power speech. But I'm going to share my experience with you all because I've been, dealing with quite a lot of Chinese companies, Canadian companies, and US companies in the past 8 years. So Chinese trend. So in the past 4 years, we've seen over 20 Chinese companies listed in Canada. So because this is sort of the period in 2003 we're starting to see more sort of influx of Chinese companies coming to this area raising capital. We started out in the first wave of China companies actually in the market back in the early 90s, 1990 and 91. Actually have some bad taste in the mouth of most of the Canadian institutions here because the company in China at that time raised a lot of money and at the end it turned out really, really bad. It's a mess. So it took totally almost like 13 to 15 years to recover the Canadian market to now to be more receptive for Chinese companies looking into our business. So individual investors and institutions have been slow to realize this growth because they have been burned before. That's pretty obvious. So they've been conservative, so it takes a little time for them to run in. And so only in the last 2 years, you will see later on some of the companies really, really strong, good growth and starting to perform. So companies also take time to deliver the results. So when they come in, nobody knows about them. They're so far in China, nobody listen, to or care about the reports, and even if they read the reports, they couldn't touch it because it's so far away. They don't have people here to represent them. So that was the early days. So this is a simple chart talking about the TSX, where we stand right now in terms of Chinese companies, Chinese-related companies. That TSX were pretty active in China. So they put on the chart and sort of give you an idea how it. Different sectors representing mostly natural resources, but there's other sectors coming along nicely that I will talk about as well. So I tell you one thing, by June earlier this year, we take a little bit of study and research. You probably see some of the companies in the book that with you today. And out of the 3 main exchanges that we're dealing with, international exchanges, Toronto being one of them, the US, of course, come out they're on top of the capital markets. They have a bit over 230 Chinese companies listed there. So I'm counting about NYSE, NASDAQ, even the small market, we call it OTC Bulletin Board, fully reporting companies, not the pink sheets, of course. And also American Stock Exchange, all the companies coming from China. In TSX, there's about 54 companies listed there that were growing, of course. And in London Stock Exchange and the AIM market is actually, we can call it the TSX Venture in London. There are altogether about 52 Chinese companies. But one note need to say is because we're most concerned today looking at the small, fast-growth market. So looking at the AIM market, the London Stock Exchange, there's only 6 out of the 52 companies are listed on the main board, London Stock Exchange. So the rest of 46 companies are all on the AIM market, which is represent a pretty good chunk of their growth there. So actually they have done quite a good job in attracting international companies. And Toronto will be next. So Toronto, so where we stand now, and TSX in the past 2 years have been pretty active in promoting themselves in China. I talked to Annie, which is the person in TSX who key person in arranging all these developments. TS has actually been to China a total of 5 times in the past 2 years. And currently, they are actually in China and have roadshow there in a number of cities. And they also have to take a long-term approach because it doesn't happen overnight. It's not going to happen overnight. They'll just go there and attract them. They're not going to go right away. But it's good for them to create a better brand name for TSX and for Toronto as a capital market, alternative choice as opposed to London and also the US, the big guys. So the sectors experience strong growth. The sectors that you look out in the next few years and already noticed that, of course, is Dr. Chow mentioned is agriculture, the fertilizing business, because the government and also the combination of automation and labor is changing the market. But I'm not talking about the labor force, of course. I'm talking about the fertilizing market, which is some of the companies already listed right now in Toronto is in the business, like Hanfang and also Bouquet. And industrial, the automobile, automotive parts and related industry, manufacturing. And manufacturing, I'm talking about mostly companies not only relating on the labor, because labor you can don't always produce so cheap. Everybody can be cheap. For long term, you need to have the seamless approach to the process to make it also attractive as long run in terms of business. Consumer products, like dairy products, government is bullish on this because they want people to be healthy. So we have seen some companies in US doing very well, in Hong Kong as well. Energy, not talk will specifically have to be oil and gas, alternative energy, they're promoting it. But anything related to the energy field also, like surfaces to the oil and gas industry or the wind, and also the alternative energy field. Healthcare, pharmaceuticals, manufacturing, drug manufacturing, there's a lot of opportunity there. And also raw materials, natural resources that we have come to know about. So expectations from Canadian investors nowadays, before, I'm talking to one of the bankers here, and they're looking for something more fast-paced, of course. You're not looking for something, because local market, they have companies 15%, 20% annually growth. I'm talking about a growth company. I'm not talking about companies with dividends paying, big companies like state-owned companies. I'm talking about private companies in China that can can grow in the next few years. So they're looking at about minimum of 30% growth. That makes sense for them to make it happen, because that can generate future growth in their money when investors invested into the company. And also timely disclosure, this is on the PR side, provide updates on business development, which is the company have to have that open their mind in disclosing timely. Of course, they have to work with the good lawyers too, but they have basically the whole mindset, strategy has to be open-minded to, because they don't do any IR in China, obviously, because so this is the new thing for them, so they have to be educated that way. Exponential growth, even though you may not achieve a certain growth right now, but once you raise the money, 10 to 20 million next round, they know that the things is coming up. You need to deliver the results. Otherwise, because it's a long-term approach. So even though you may be just a venture company, may not produce as much revenue with just a startup, but even they give you 10 to 20 million bucks here, institutions, they want you to deliver the results in in the next 12 to 18 months at least. So companies' performance, so I just take a few samples that are doing well. There's a lot of companies, most of the Chinese companies doing very well in Toronto right now, in the last 18 months. This is Hanfang, one of the leader in the industry. They're doing, they're in the fertilizing business, as I said, and they've done very well in terms of the share price and the return to investors. We talk about what did they do right, what have they done right, as opposed to what happened before, back 10 years ago. And then another company, one of the earlier companies that have long listed in Toronto for a long time, Sino-Forest, when back 8 or 9 years ago, I visited the company, they have an office in Mississauga. The CFO was there, and I talked to him and said, nobody cares. Like, no institutions, no investors care about the company. Even they do do presentations, do this, and no one is, it's really because no one understands them, because no one is willing to take the next step to go to China or to understand the growth. But also part of the being successful now is that they also changed the strategy into more fast-paced growth area. So at the forest, for example, they are changing the forestry business. They have changed to they selling timber chips to the local market and all exporting market as well. But they also changed it in the last 2 years into plantation business, which is very high growth, high margin business. But they waste a lot of money in order to pursue that. So it's also good for companies to change strategy. This is the Miguel, the company that I mentioned earlier. They were on TS Venture before. Now they graduate earlier in the year, and then the potash-based fertilizer business, which is, China is the largest fertilizer consumer in the whole world. So you can think about it. And they also maintain a very good growth when you look at the financials. So you all surpass all the investor expectations. That's sort of the share price in the last 18 months again. And then the last one, Hanwei, also in one of the very good sector that I mentioned about, it's in the energy. So they surface the oil and gas industry. They're producing, they call fiberglass reinforced plastic pipelines to deliver to the oil and gas industry. But they're also not only isolated to the oil and gas industry, they also can be applied to other industry like the coal industry or wind energy. So they're looking to fast track the company into different types of area that can apply to their products. So that's how they're doing so well. So future prospects. So in the near term, China is still going to be a hot topic, but Toronto will still struggle to keep pace with other two exchange. But that will change because of a few things. The Chinese company not looking nowadays. Before when we think of Chinese companies, they come here to get the money, and people think they will go away. But now they're actually not just coming here for the money. They may come in for the money, of course, but they wanted to build a brand name, international brand name. And then the next thing is they wanted to look at opportunities here in North America and Canada. They want to do JV here, merger acquisitions. So that's why, and exchanging technology and knowledge here. So that's sort of different approach than before. The smaller companies come here just for the sake of money, and they get the first round of financing, and then they don't care about the investors, and they run away. So that's the difference in terms of mindsets. So new opportunities. You may know, of course, Dr. Chow mentioned that their company. It also will be a good opportunity for Toronto Stock Exchange, is because some of these Chinese companies are already listed in Hong Kong. Why they're so good? Because they already have the financials to support it. Because they done so well, because Hong Kong's stock exchange is a very highly regulated exchange, just like US and Canada. So they already done all the financials regulated. They just have to convert it into Canadian GAAP. And so it's much faster for them. And some of these companies have the potential. If the business suit well here in Canadian perspective, they will come. So that's another opportunities that will be useful, and also investors should stay on top, because in the next 2 years and 3 years, you will see a lot more companies just like Harmony coming here for dual listing. So what have they done right? I mentioned before, they have done a good job. I think it's not only just a specific one thing. It's they have opened their mind. For example, a company like Hang Feng, Kim Oishi, the person here in Toronto. He is, basically the company opened their mind. Mr. Yu is the company in charge. And he doesn't speak much English, and there's no way for him to come in here, sitting here to represent the company towards the Canadian investors here. So we work with Kim, which is a very, it's a ex-broker, but he's very well known in the industry, so he can help him to represent them here. But the point is, they need to open their minds to work with the qualified people to help them represent the company. It may not just be just one person, maybe a team of people that can bring them to the institutions, also get the story out, message out to the investors here, do a conference call. And also another thing, they've been receptive in bringing investors over to visit their plants. So they've done it quite a few times already. So that's also a plus because investors can go there and analysts can go there to visit, can feel it. Not just before they, Chinese companies, they don't really do it because they're very closed in and they're not receptive of all these. So we have to be open. Finding the right people in Canada, professionals like lawyers, get the right people who have done, right in the Chinese space. And then they can be able to increase not also the liquidity of the stock, but also people to raise money for them. Bankers here, they want to, all this information have to be transparent. So that the CEO and the chairman of the person can focus on running the company in China, operation. They can run it, they produce a good result, use the money, and run it, continue, because they don't run the show here that well, so they have to work closely with people here. So future challenges, so it's still difficult competing in the US in terms of getting the bigger companies. I'm talking about large companies with, all these bigger companies with 中国在前面的, all these companies with China, selling with China, beginning with their name. So, but I'm talking about in the small to medium-sized companies, Toronto may have the edge. And I was talking to, I was in New York yesterday, and one of the guys who the top securities lawyer, he said it's harder to do reverse merger in US now, which is reverse merger usually a fast track of way for small companies to list in US, OTC market, and then get on to the MS or NASDAQ. But it's very hard now because they changed the rules, and they have to create a very different structure, a more complex structure. So it's gonna, slow down the pace over there, and it will encourage some of the companies to come to Canada. So create more variety of companies. Also, it's, right now we don't see, I can name maybe 20 to 30 companies that are famous in this, that are from China, but other than that, in each industry, at least you have to have 3 to 4 representatives in order for the whole China to be real market for people to see. Because right now you go to fertilizing industry, there's only 2 companies. You may have the Spirit Ventures, they have 3 companies. Different sectors, only 1 or 2 representatives. Of course, mining, you have quite a lot, like over 20 companies active in China. But other than that, it's only 1 to 2. So we have to have that different variety of companies from China coming to list here, so that the people will see, something to compare with. Right now, we just have to, pick one out of the whole sector. So more room to grow, so we're pretty optimistic. So Chinese companies coming just the tips of the iceberg in the last 4 years, so we expect more, the quality of the companies will also continue to increase also. And more money will be made by the investors here in the next few years' time when more quality companies coming in. So just talk to you finally, talk about indices tracking Chinese stocks. We, NAI is our company, we have our own index we call NAI China Small Cap Index, which tracks all the small cap companies listed in Canada and the States. And we have 30 companies that are listed in both Canada and the States, and then we track them over the time, what the performance is. So that's sort of the, in the last, since May 2004, we have been performing quite well. And the last slide, I wanted to show the next one. It's 19. And it's another index in US, which is called US 6 Halter Index, which is actually the first index in US to track Chinese, US listed Chinese companies. So basically what happened is, back in 2003, they started the index with about a little bit over 20 companies. Now they actually sold the company. It's actually to become an ETF, so it's traded funds. Sold it to PowerShare, so it's now traded on the American Stock Exchange. It's a purely US listed Chinese companies, keeping track of all the major companies plus the small companies too. So companies with a 300 million market cap, even will be on there. So I think they have about 40 companies right now in their index. So that's sort of something I wanted to show, because I think in the down the road, not only beside the Canadian stocks, but once we also will have an index or even ETF traded with purely Canadian listed Chinese companies, that's the market, really you can see is the, main thing will change, because all these institutions will go in and track this and, have a benchmark of knowing what they are doing so well. So right now it's just individual stocks, about 20 of them in Toronto, but, in the future, I think, we can be within 5 years, we can see, that's we call the Hotel US Exchange, that's they're actually traded in Amex. So so basically that's what pure Canadian listed Chinese company ETF and more funds investing into directly. So that's what we see in the next few years. We'll and then more quality companies, and will become more instruments for investors to invest in the Canadian market. Okay. That's it.
Thank you so much. Well, we've digested a lot this afternoon from our 4 speakers, but the day's not over yet. We do have, let's see. Yeah. We're going to head now to a cocktail event, and we really hope that you'll join us. It starts at 4:30 in the Upper Canada Room on the 18th floor here. So the Upper Canada Room on the 18th floor. And it's not just us, folks. There's going to be more than 200 people as well there. Lots of opportunity to meet people, to do some networking. We're all going to be there, so we'll see you there in a few minutes. Thank you.
Thank you.